Hello traders, I hope you all well. I'm doing today's midweek market focus. Today is the 24th of September 2014. I've got a few bullet points here to cover. First one is that everything is trending, whatever it is, even the stock market, most of the currencies, 90% of them are all trending. Euro, Swissie, Kiwi, all the yen crosses. Dow Jones, S&P 500. So pretty much everything across the board is trending. Now the question is what to do or how to trade it. Well, on trending markets, you can wait for bounces off the 20 or even the 10 moving average, only when it's trending very aggressively in one direction. Because the 50, it won't reach the 50 if it's trending aggressively, it'll reach the 20 or the 10 moving average. I'm going to show you a few examples so it'll make more sense. Right, so let's get started. Just come out of this, bring the chart. There we go. Right. So let's see what we have. Okay, let me show you with the ones that I'm keeping an eye on, even for tonight. I got CAD Yen, which it was placed as a trade call yesterday, and it didn't get triggered, which is even better, mainly because it's now giving a much better reward to risk ratio. And the reason being is because it has pulled back down and it's now further from the white line. Talking about rules for an income generator. This is also giving an entry here for master traders too. Reason being, it's just giving higher highs and higher lows, so it's on an uptrend, and there's a lotus bar in the direction of the trend. And for those of you who looks at divergence and convergence, you have to compare the last two swing highs, which are these two guys here, that one and that one there, and then you have to see whether it's giving divergence or convergence. So if you keep an eye on this, and now the question is it giving convergence or is it giving divergence? So I'm going to give a few seconds. Right, so the answer is giving divergence. And this is pointing up, this is pointing down. Let's put it back down where it was. Now on the stochastic indicator is giving convergence to the upside. Yeah, so this is pointing up and this is also pointing up. Okay, so let's put this like that, bring this back down where it was. Great. So now this is giving high highs and high lows, stochastic convergence to the upside, lotus bar in the direction of the trend. This trend is very, very powerful. Very, very powerful and it's very pronounced. I don't particularly like the trend when it's very aggressive to the upside. Well, this is a bit less aggressive than the actual Japanese yen itself, the USD Japanese yen. Okay, so well, he's giving an entry. The entry will be 5 pips above the high of this bar, and the stop loss 100 pips below the low of the bar for an income generator. For master traders, you can take it as 5 above the high and 5 below the low. That will increase the reward to risk ratio, but you will have more chances to get stopped out. Again, it's personal preference, how you want to take it. Make it a bit more complex. I'm going to remove the indicator for a sec, and I'm going to go on to FIPS. Well, let's put a 10 moving average, because we set on the bullet points that when it's trending, you can take bounces of the 20 moving average or even the 10 moving average, depending on the on how how much is trending, depending on the whether it's very steep or okay. So let me just go into the moving average 10, and I call it gold. There we go. So here is, see that because it's very aggressive, it's bouncing off the 10 moving average. It's bouncing off at 10. Here we go, kicks off. Now it's literally sitting on the 10 moving average. The bar is flashing because it's becoming a buy a bar, sell a bar, buy a bar, sell a bar. As you can see there, it's changing colors. That's because it's going past the entry. When it's above the opening, it'll be green. When it's below the opening, it'll be red. Not a big deal. Still a low test bar. Doesn't really matter the color of it. Let's go into the FIBS. You have to go from the previous swing low, or the most recent swing low, to the most recent swing high, ignoring the bar now. Okay, so you go from the previous swing low to the most recent swing high as a Fibonacci retracement level, and it's sitting on the 618 Fibonacci retracement level here, which is overlapping with the trend line that we have, and pretty much overlapping also with the 10 moving average. Okay, let me just get rid of this. So what you're expecting is, well, another phase one to the upside. Yeah, is phase one, phase two. That was another phase one and phase two. Let's get rid of this and that, make it a bit more clear. There we go. So yeah, we'll be expecting another phase one to the upside, and then phase two, and then phase one, and so on and so on and so on. So that's a trade there for tonight. I'm gonna be placing it as a trade call as soon as I finish the midweek. So you probably get an email coming along with this trade call. Canadian Japanese yen long as an end of day trade call. If you go into the other Japanese yen crosses, most of them they'll be giving entries, or not necessarily entries, but they'll be trending to the upside. Let's start with the first one. This is the Japanese yen. These are two low test bars here in a row. Okay. So last time it gave a low test bar which was down there. It took off. Now it's giving another low test and another low test. It's quite close to the top. There's not much space there. There'll be an arrow pointing up on this last low test bar if the bar turns into red. Otherwise, there'll be no arrow pointing up for a income generator. Okay, you can still take it. You can still take it based on the last low test bar with an entry 5 pips above the high of the bar and a stop loss 100 below the low. Okay, or if you want to take it really aggressively, just call it 5 and 5, or 5 above the entry and the stop loss just below yesterday's low test bar. So in other words, entry up here and the stop loss down there. Okay, but either way, it's a very aggressive trade because you look how far it's from the 50 moving average. It's very far from the 50 moving average. The cycles are up here, and the phase one and phase two are very tight and small, absolutely tiny. Okay. So as I said, all the yen crosses will be giving entries. Let's go on to the next one. Not necessarily entries, will be trending. Sorry. Euro Japanese yen. So here, for example, is not giving an entry. Okay, this is not giving an entry at all. That was a nice trade to sell there quite a while ago. Let me just delete all these. Right, so yeah, nothing there at all. Next one. This one here, that is a high test bar. Then you get a low test bar down here. The pattern is not very clear. It was ranging earlier, then it took off, came back down a little bit. Not clear at all. Next one, Kiwi yen. Kiwi yen looks good. this market is giving higher highs and higher lows, and there is a nice trend pushing up like that. Now we copy and paste this line, put it up here. So you'll be expecting a move like that in the direction of the trend. If the trend does continue, for Fips you have to go into the most recent swing low to the most recent swing high, and if you look carefully, it's not actually touching the 76 Fibonacci retracement level, so it is not qualified on the 78.6. The Fips is not an essential point, so it doesn't really matter. It's just an extra point for confirmation on your checklist. So here, what we have is a level of resistance becoming support. So that is a level of resistance there and here becoming support, and it's also bouncing off the 50 moving average, and also it's also bouncing off the trend line support as well. As I said, you're expecting this move to happen. Okay, that's phase one, phase two. You're expecting another phase one to the upside. Here is giving RSI convergence by looking at the last two swing highs, because that's a cycle and that is another cycle, and you're expecting another cycle and so on. So here is giving RSI convergence. These are the last two swing highs, and then you have to compare the same swing highs here. On the stochastic is giving divergence and it's pointing down. Okay. So it depends. It's better if you actually stick to one particular one and always follow that one. Right, so let's carry on. So again, as a trader with an entry here, stop loss there, it's giving an inside bar because the low is actually the same price. The low is the same price. Actually, it's 58. The low is 87.580, and the previous bar is 87.588, which means this bar is higher and this one is slightly lower, so it's actually an inside bar. Even if it's the same number, it'll be an inside bar still. So it's an inside bar which represents indecision in the market until it breaks through the highs or the lows. So I certainly qualify that one there. So far we've got two, got the Canadian and the so we've got the what was it? CAD yen, I think it was. Yeah, we got the CAD yen and the Kiwi yen, I think it was. That one there. Yeah, cool. Just get rid of this box. There we go. Right. So let's see what else we have. So these are all buying opportunities on aggressive trending markets. That's what we're looking for, bounces of the 10 moving average or the 20 moving average if the trend is a bit less pronounced. Right, let's see what else we have. Canadian was a beautiful one. Trade still running. It gave an opportunity to buy down here. There. That was a good buying opportunity. Need to analyze the chart. Put the line, copy and paste it, you put it up here. So when you draw the cycles, it'll be phase one, phase two. Okay. And there's the previous cycle, phase one and phase two. So these are the last two swing highs, which is giving high highs, and these are the last two swing lows, and it's also giving higher lows. Now, this bar here, which is a bullish continuation bar or a buy bar, is bouncing off the trend line and is also bouncing off the 50 moving average, and is in the direction of the trend. The reward risk ratio is not amazing, It's like a 1.5 to 1, 2 to 1. If you're gonna take it back up to the top of the range. When you trade the stop loss, um, if you don't want to give the profit back, whoever took it, I know many clients of mine have taken this trade, and some of them don't want to give any profits back, which is fair enough. So what you have to do is to trade your stop loss very aggressively. So you're not going to give any profits back. So what you have to do is to put the stop loss here tonight. That's it. Okay, which means you're gonna lock in this profit in case it does reverse. In case this happens, if it does continue, you're gonna keep on trading the stop loss there and there and there and there and there and there and so on. Yeah, until it reverses. Okay, so this is a definite winning trade. You can lock in some profits there. So I mean, it's up to you how you wanna trade it. You can always leave the stop loss there at break even. So even if this happens like that, you're still gonna be in the trade, and you're gonna make much more out of it. Okay, so it depends what kind of trader you are, whether you are a conservative trader or whether you are an aggressive trader. Um, okay, excellent. So this is one of the trades that we have running at the moment, which is performing very well. Let's look at what else we have. Euro Canadian gave a good selling opportunity here. I wouldn't be looking to sell now because these lows are flat. Okay, so I wouldn't be looking to sell now against this level of support. However, this bounce here was beautiful because it was giving lower highs and lower lows. So these were the last two swing lows, and it was giving convergence to the downside. So the market was giving lower highs and lower lows. That was the one to sell in the direction of the trend. They trail it, and you can stop that here, so you make from here to there. Yeah. Okay, so that was another winning trade there that happened last week. Let's get rid of all these. Leave down there. I'm gonna leave this one here. Okay. Also, this is giving divergence now. This is pushing down slightly, and this is pushing up. Okay, so this is called RSI divergence. So, which means in this agreement, sorry, it's likely to reverse to the upside, according to this indicator. Okay, so this is on Forex. I'm just gonna move on to the stock market. Here we have the S&P 500. S&P is giving a beautiful entry here tonight. Market is giving higher highs and higher lows, just about, right? So high highs and higher lows. It's pretty much oversold and down to 33. And this one went down to 26. 17.30. Let me just put this back to 17.30 as well. 1 second. Although for stocks, 80-20 is really good. So I'll put 17.30 here for a minute, so you can see that it actually went beneath that. Okay, so it became oversold. Now there is a bullish continuation path in the direction of the trend. Market is giving high highs and high lows. It's retesting this level here at the bottom. It's also bouncing off the 50-moving average, so you could potentially look for buying opportunities and bring it back up again. This area up here is all historical highs up here. Okay, this is the highest point ever recorded in history, so you have to be very careful. This, looking for the phase one there, move your stop, yeah, and then truly as you wish, depending on whether you're an aggressive trader or a conservative trader. This on the S&P 500. Me personally, I prefer the Dow Jones. It's got more strength due to the fact that the high is much higher than the previous swing high. So there are buyers willing to pay more in the market, and they can easily be seen on this particular market. There is a high test bar here at the top. was a historical high. This one here is a bullish continuation bar in the direction of the trend. Now, this whole picture, let's just put some levels up so it becomes a bit more clear. There is a level of resistance there, then it got broken, ended up giving a high test bar, which was the historical high, then it came back down, big seller bar, and now it's a bullish continuation bar or a buyer bar. Why? Because it closed in the last quarter. So that's the definition of a buyer bar. When the bar closes in the last quarter, so or in the top quarter, becomes a buyer bar. Same thing applies vice versa. For a seller bar or a bearish bar or a bearish continuation bar, the bar has to close in the last quarter or in the top quarter or in the bottom quarter for it to be a seller bar. Let me just give you an example. So that's a seller bar and that is a seller bar as well. Even these two bars here, that bar and that bar, they're both seller bars. And this one here is a buyer bar. Great. Okay, so that is the Dow Jones giving high highs and high lows. When the market closes tonight at 9 p.m. in the evening, if it closes like that and the bar doesn't become any bigger, there'll be a trade there, an entry just above the high of the bar, and a stop loss just below the low of the bar down there. The pattern as it is now, yeah, if you get triggered in, it means that it's broken through this previous level of resistance, which is ideal, and it has to close above, so then the buyers are getting more confident that the price is going to rise. So these are the Dow Jones and the S&P 500. If the phase one kicks off, that indicates that the company is trading within these particular indices. They're going to be giving loads and loads of buying opportunities, as they have been giving for the past year or so. It's literally just been climbing up, giving loads and loads of buying opportunities. Okay, we're now going to the stock market, as in the FTSE 350. Save no. So this is a Man Group, which I actually have some shares on this. As in physical shares. Besides that, this particular instrument, Man Group, which is a British company listed on the FTSE 350, is giving a low test bar in the direction of the trend. So this could be a bit of a buying opportunity. Could also take it as a £20 as well, with an entry here, stop loss just beneath the 50-moving average, and a target. I would put it just beneath the swing high here, just in case he decides to say hi to this guy up here and then retrace from there. Okay, as in, because this is the top of the range. So this is on Man Group. There are lots of buying opportunities. Let's see. Let's see what comes up for short. Had a few options earlier. Which one was it? -LON. This particular one triggered in today. There is looks like a low test kind of doji bar. It'd be a doji bar if the difference between the opening and the closing of the bar is not more than 5 pips. Then it'll be a doji bar. Is respecting the 20-moving average quite nicely. The entry was up here and the stop loss was down there, and it was based on yesterday's bar. So you'll be taking this trade in the direction of the trend. Okay. And it's respecting the 20 nicely there, as I just mentioned. As your trend pushing up, you can always copy and paste it to get a bit of a channel going up like that. So you can take this straight to the top of the range, back down, back up, back down, and so on. So you'll be looking to capitalize on these phase ones going up. Okay. For a power play, you have to wait for 5 bars, and then you have to move the stop loss just below the low of the 5th bar, and then you trade the stop loss on a day-to-day basis after day 5. So it'll be on day 6, day 7, and so on and so on and so on until it stops you out, because there is no target, no target on the power play. Okay, so again, it's all based on the same techniques and same principle: high highs and high lows, moving averages, price action. Okay, now for volume, for stocks, you also have the volume at the bottom. Make sure the volume is minimum, well, ideally above 500k, no less than 380,000. Okay, so 380k. You have to make sure that the bar has closed. So when you're looking to place trades on stocks, you have to make sure that the bar has closed, which closes at 4:30 if you trade in the UK market. Okay, so the UK market is from 8 in the morning to 4:30 in the afternoon. US market is from 2:30 p.m. London time until 9 p.m. in the evening. So there's a 2 hours overlap between the London session and the US session. Right, so there've been quite a few opportunities. I mean, because the top market is going up, and that's when you get a lot of buying opportunities. And all you have to do is to wait for a pullback, and then place your orders, and then take it from there. Right, I'm going to upload the video now. I hope you guys enjoyed it. If you have any questions, feel free to put it on the website. You have 24 hours to for the Q&A, and I'm looking forward to seeing you all soon. Thank you very much. Speak soon, and bye now.